Hello and welcome. You're watching Our Speak Here on Bloomberg Queen. I am Agam Akil. Hi, Alex.
Hey, Agam. Well, I'm Alex Matthew. If you've got questions on equity, then you know that this is a perfect show for you. You can send those queries to us on Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022-454-04141, or you can mail us, as some of you have already done, on askpq@bloombergquid.com. Just make sure to add the AskPQ hashtag.
Well, let's take a look at the markets. And, well, the markets are really under pressure. Unexpected lines, considering we've seen some weakness across the globe. And what we're also seeing is the benchmarks declining by around 4.7% on the back of that. Bringing up the Nifty Banking Index as well, that's also declining by around 0.3%. But if you notice, the losses here are a lot less than the benchmarks. That is because of continued strength seen in some of these PSU names. The mid-cap and the small-cap indices were actually bucking the trend and advancing. So they are actually moving in the opposite direction when compared to the benchmark indices. Let's take a look at the losers and the gainers. Let's start off the gainers then. Indiabulls Housing Finance continues to advance. Strength seen in Yes Bank, now at 185. Asian Paints now comfortably above the 1400 mark, up 1.3%, 1.2%, bringing on some other gainers as well. We have M&M up around 1.3%, but after that, the gains are less than a percent. Let's take a look at the losers too then. And Grasim is right there on the losers list, high up, down 2.5%, followed by Vedanta and Bharti Airtel, also declining in trade by as much as 2%. Another quiet day of trade, I'd say, Alex, though the benchmarks are coming off to a certain extent. Well, the Nifty is holding on to 10,900. All
right, let's pull up some of the questions that we have. I do want to say that of the two experts that we're going to have, we have Amar Singh of Angel Broking, who will join us in a short while, and we have Sandeep Jain of Tradeswift Broking, who is already here to answer all of your questions. So we're going to take a few fundamental questions off the bat, and then we'll start taking a few more questions on the shorter term of the spectrum. Let's start with a question on the auto ancillary space. Sandeep, or rather, do you want to talk about, for example, the banking space, since that's the latest news development? I think we should address that on the top of this program, since we've just gotten confirmation, in fact, of the Bloomberg story that was published yesterday that said that around 40,000 crore would be infused into some of these PSU bank names. As Agam pointed out, some of these banks are actually showing signs of positive activity, and this is in a market that is a little depressed today. But Sandeep, I just want to ask you, some of these PSU bank names, Central Bank of India up about 5%, markets viewing this as a positive. How are you taking this, and would you pick some of these names for a long-term investment at all?
Yeah, certainly. See, PSU Bank somehow looks good these days, because the best part is that there is no downside. Somehow all the bad news have been actually discounted, and now what can happen is only, better than what has happened in the past. So I feel this news is a good positive news, and somehow SBI, PNB, BOB, all these are performing stocks. And I feel that, Corporation Bank can be a good stock. Maybe, the PCA action can also happen, then the fund infusion can also happen. So certainly PSU banks are good bets. One should certainly look on them. And then Union Bank and Corporation Bank in the smaller banks. And in the larger banks, somehow I feel that, BOB, PNB and SBI. SBI should be bought on declines, because it has already rallied a lot yesterday. So, but then still, for the longer term, all these stocks looks really good.
Okay, well, Sandeep, we have one more for you. This one is on mail. So we have BJ Rao, who writes to us on mail. He says he's holding shares of MCX at 680 per share. He asks if he should accumulate at lower levels with a long-term view. What is your view on MCX, Sandeep, and would you advise him to add?
See, I won't advise him to add at these levels. Somehow, it has also corrected from the higher levels, and the exchange looks promising also. But then there is a good amount of competition, which the exchange will, see in the near future only, because BSE and NSE has started aggressively getting into the commodity segment, and BSE has become very aggressive, and they have started doing some liquidity in gold also. And then NSE will also get very aggressive. So I think there will be some amount of competition. So it will be tougher for them in the longer run. But then, since it is the market leader, so I won't, suggest him to get out of the stock. He should hold on to the stock, but he should wait and watch for the right prices to enter into. Maybe he can buy on some declines if there is a good correction. But at these levels, I think it is just a hold rather than accumulating and buying or averaging or, getting into it.
All right, let's talk about insurance companies. Now, we've got a question from Neeraj Chauhan. He's asking for a view on public sector general insurance companies and whether GIC or a New India Assurance makes sense as a long-term investment at this point. We've got GIC that's at 278, but if you pull up the longer-term chart, you'll notice that it hasn't really done much. And New India Assurance, if I'm not mistaken, has hit a 52-week low today at 191 or thereabouts. 6 months, as you can see, for GIC are down about 22%, 23%. So how do you view these companies? Would you rather invest for the long term, Sandeep, into one of the private sector names?
See, somehow all these insurance names has to be invested from the longer term, perspective. And even HDFC Life or SBI Life or ICICI Pru, all these have actually corrected. And somehow I feel that, general insurance, GIC, can be one bet, because it is the only listed reinsurance player and in fact the only reinsurance company in India. And somehow I feel that, GIC, RE, those who have already invested in it, they should stay invested and from a longer perspective. And then ICICI Pru, somehow I feel that, looks very attractive at these levels after correction because the downside risk is really very low. And I think this is an underperforming sector, but still, it looks very promising from in the longer run. So I feel it is just the time. It's the matter of time, which will, show the results. So one has to be invested for at least 3 to 5 years time frame.
Okay, next up we have a question from Rishabh Jain, and he actually wants a view on two mid-cap stocks. One of them is NOSIL. NOSIL, as we all know, has seen a lot of HNI interest. It's currently at around 169, 170. It's not doing too much today. And the other one is Butterfly Gandhimati Appliances. This one is the other stock which keeps coming into investors' radars every now and then. Of course, it's into appliances, so there's been some traction, but not as liquid as NOSIL. This one is at around 236. Sandeep, any one of these counters under your radar, if at all both, what would your advice be for both?
Yeah, NOSIL has been on my radar, and in fact we have recommended the stock since 55, 60 levels, and from there it went up to as high as 200 plus levels. I think 236 is the 52-week high. So I feel that at these levels somehow one should certainly hold on to the stock. It looks really promising at these valuations, and it has corrected also from highs of 336. So downside risk also looks very low, and now since the market has started performing, so I feel that the mid caps and small cap space will really perform. So Butterfly Gandhimati, somehow I'm not very keen on buying it. It's an illiquid stock also, but then the name is fancy and looks very attractive also, and lots of HNI investors have actually invested in the stock. But still, NOSIL is a safer name and a better name, and I think one should accumulate also it on declines.
You know what they say about names, right? What's in a name? Anyway, let's talk about the auto ank space, PPAP Automotive, and let's also talk about Jai Bharat Maruti. Sandeep, if I remember correctly, this is a stock that you had recommended a while back for the long term. Do you still hold to that view? And while you're at it, can you also comment on Federal Mogul?
Somehow Federal Mogul doesn't look very attractive to me in terms of the fundamentals or in terms of the valuations. But then, JBM Auto certainly looks good. And then the auto ancillary space somehow have been very, very aggressive and very bullish on the whole segment. But since last 2-3 months, they could not perform because of the main auto sector could not perform. So I feel one should certainly stay invested in the auto ancillary space. And there were some good stocks which we recommended on your channel only, like Rico Auto, which performed yesterday. Then one stock was Jamna Auto, which actually underperformed and it actually has corrected also. I started recommending the stock at 80 levels. So it came down to as low as I think 62, 65. and now it has started doing again, bouncing back. So I feel those who have invested on my recommendation at higher levels, one can certainly stay invested. The fundamentals are intact, and I think these stocks will really do well. And Rico Auto and Jamna Auto and then Munjal Auto, Munjal Shua, all these are like cheaper names in this particular sector, so one can stay invested.
Okay. Well, on that note, let's bring in our technical expert of the day as well. We have Amar Singh of Angel Broking, who is now joining us on the show. Amar, good afternoon. Thanks so much for taking the time out on such a short notice, that too. Amar, actually, right at the top, we have a Technicals 101 question for you. So we have Ujjwal Kumar who writes to us, and he actually wants to know about the RSI indicator and how it works and how to interpret the movements on the RSI indicator. So if possible, you could give us your view here and how you use it, if at all.
Yeah. A very good afternoon. See, RSI indicator is basically, it falls under the category of an oscillator, and it is a relative strength index. So basically, what it does is that it studies as to the closing price versus the highs and the lows, and based on that, it plots the overbought and oversold zone. So ideally, if you look at it, if a stock is in oversold zone, so as I said, oversold and overbought zone. So for oversold, the values which are taken for RSI is 30 and below. And for overbought, generally it's taken 70 and above. Some take it 80-20, some have 70-30. And it has a range from 0 to 100. So what one can use RSI for is to identify oversold and overbought zones. So if the RSI is below 30, one says that it is in oversold zone. So there is a possibility that the stock could bounce back. Likewise, if the RSI is above 70 or above 80, that means it is in overbought territory. That means it is in overheated territory. So there is a possibility that the stock could correct. But as I'm using the word possibility, one needs to understand is that RSI is, as such, you can't use it alone. You have to use it with some trending indicators, because extreme readings of RSI, they signal a start of a bull run or a bear market. So just because the RSI moves in overbought territory or moves in overbought territory does not mean that a correction is likely to happen. Because many a times one will find that RSI remains overbought and the stock continues to rally, because the momentum of the stock is very strong. Likewise, the stock moves into oversold territory, and there are some traders who would simply buy expecting a bounce back because it in oversold territory. But the stock continues to fall. If you look at Tata Motors, if you look at Idea for some time, so you'll find all the stocks which were correcting sharply, they were in oversold for very long. It could be weeks and months, and the stock continues to fall. Likewise, the stock could stay in overbought. If you look at Avenue Supermarts, the recent one, which is rocketing, you'll find that it is in overbought territory. Still, the stock is rallying. So RSI is a good indicator, has to be used with trending indicators like moving averages. It tells you the overbought and oversold zone. So it definitely gives you some very good clues. If you match it with key support and resistance levels, then it can be very well used for short-term trading as well.
Well, that's a critical point to note out here, that you need to use the RSI along with a trending indicator. Of course, this is an example on your screen of the RSI for Avenue Supermarts, as Amar was pointing out. It's currently higher than the mark of 70, which means that it is in the overbought zone. It hasn't really breached and gone below the mark of 70, so it is still in the overbought zone. Should we see that come off, well, you need to make your decision accordingly. But for now, as per the indications with the standalone RSI, that is the relative strength index for the past 14 days, at this point in time, Avenue Supermarts, taking the example of Amar, is indicating the stock to be in overbought zone. But as he was saying, that you have to work it out with another trending indicator.
And in fact, what he was also pointing out is that this stock, despite it being in the overbought zone, has been rallying significantly in the recent past. All right. With that note, let's take another short-term query. Sandeep, we'll come back to you in just a bit. We've got lots more questions for you, but this one should be relatively easy for you to answer. Amar, on the top of your list, do you have any 3 stocks that you see for a 6-month time frame that should be invested in?
Yeah, one stock one can definitely look at is Larsen & Toubro. because technically this stock continues to be extremely strong on the long-term charts. It did witness some correction. Currently, it's around 1440 odd levels. It came down to 1350, again has bounced back. There is a possibility that the stock could witness some selling pressure around these levels. But consistently trading above 1450 levels, the stock has a potential to rally towards 1550 levels or so. What one needs to remember is that ideally any pullback can be used as a buying opportunity. Very strong support for this stock comes at around 1330 levels. So this is one stock one can look at, and another stock one can look at is Tata Sponge. If you look at this stock from a long-term perspective, the stock continues to, it has witnessed some correction, but it's forming a, I would say, bullish divergence both on the daily and the weekly charts. And even in the long-term charts, it's in oversold territory, and it is now appearing to pull back from the, I would say, key support zones. So the stock has a potential to rally towards, currently it's around 800 levels, so there is a possibility that stock could rally towards 880, 900 levels. And the recent low which it had made of 727, that ideally should be a short-term bottom for this particular stock.
Okay, well, we have a similar query for Sandeep as well. We have Anand Sivaguru, and he actually wants to know at least 5 mid-cap stocks for the long term. I know, well, Sandeep, at this point in time, maybe a hard one considering the markets are at elevated levels, but if you can't give us at least 5, if you could give us even 1 or 2 names, what are the mid-cap stocks in your radar which look like good bets at this point in time with a long-term point of view?
No, I will certainly give you 5 names, don't worry. And we have been actually, we have been tracking, and I feel that, mid caps and small caps might do well in the coming sessions. And I think, the markets have actually consolidating also at the higher levels, and looks like, those larger names and bigger names have already outperformed. So this time it's the small cap index and the mid cap index which will perform. So, but still I will give a mix of, all these mid cap and small cap and large cap. So one is ITC. Certainly I've been recommending this stock since 270 levels, went up to 300 levels, now come back to, 280 levels. So I think ITC is a good name. Then a sister company from ITC is stable only, that's VST Industry, Wazir Sultan Tobacco. That's a fantastic company, attractive valuations and available at, 23, 24 P multiple, so looks very attractive. Then there is a railway related stock which is RITES, a new IP only. One can certainly look at RITES. Then one fertilizer stock called Chambal Fertilizers from the private space, and from the PSU space it is RCF. Today it has already rallied. So what I feel is one should wait for some time and then buy on declines. And then I have taken some auto ancillary names also, like those Rico Auto, Jamna Auto, they all have corrected. So one can look at this space also on declines.
Sandeep, we've got another strategy, or rather portfolio kind of a question for you. Rahul Sinha wants to know if the argument that was being made of shifting a portfolio from NBFC names to banks still holds, because from what I'm hearing, despite the fact that there is this conversation around the liquidity situation easing going forward, there's still an issue with regard to certain NBFCs raising funds in the bond market. Despite the fact that they're getting money in the bond market, they're still raising at elevated levels. What are the kind of picks that you would possibly have, and do you think that an investor who is holding large number of NBFC stocks should consider at this point moving to banks?
Yeah, certainly. See, NBFCs have actually bounced back also from a steep correction to lower levels. Now they have bounced back at least 50 to 60% what they have corrected. So now after this retracement, I feel that this can be used as an opportunity to come out of the weaker NBFCs or smaller NBFCs, or NBFCs not being promoted by stronger pedigree. So I feel that, LIC HFL is one NBFC or HFC one can look at. HDFC is a good HFC one can look at. So one has to shift from smaller NBFCs to these more established and older NBFCs, or to the banks, as I have already mentioned about some PSU banks. I think BOB looks very attractive to me at these levels. PNB looks very attractive to me at these levels. SBI on correction certainly can be bought because yesterday it has given a very good rally. So all these names can be certainly used to, switch. So I think from smaller NBFCs, it has to be the bigger NBFCs or the good PSU banks.
Oh, well, moving on, we take one more technical query on YouTube. We have Adit Shah. He wants a view on JK Tires with a time horizon of 1 month. His question is, should I buy at current levels? Of course, JK Tire is up and about today, up 6% at 109. Amar, would you recommend Adit to go ahead and buy even at these levels?
Yeah, if we look at JK Tires technically is positive on the short-term charts, and on the long-term it's in oversold territory. That's the reason we are seeing this pullback. But JK Tires is now approaching its key resistance zone. So somewhere around 112, 114, that's a very crucial resistance zone for JK Tires, and that is where the stock will meet with profit booking and also some selling pressure coming to the stock. So ideally the risk-reward ratio at the current levels would not warrant to enter at these levels. However, what one can do is that any pullback in the stock towards 105 levels, 104 levels, ideally that can be used to initiate a long position, because till the time the stock does not close above and stay consistently above the 114 mark, I would say that the stock has a potential to witness a decent amount of profit booking at those levels.
You know, we did speak about Interglobe Aviation while we were speaking about the RSI. Let's pull up the chart again and pull up perhaps the last 6 months or so you can see the kind of movement. It's more or less been in tandem with the kind of movement you've seen in crude. So the kind of crash that you saw in crude oil prices has aided the recovery in Interglobe Aviation. It's up for 6 months, about 1.25%, but you can see that real sharp increase from October onwards. The last 3 months have been a 32% increase. Amol Dongre is holding 100 shares of Indigo at a price of 1,050. And his horizon, Sandeep, is only about 10 months to a year. Now, this overarching conversation that we are seeing about crude oil prices and about Saudi Arabia and the OPEC Plus and controlling the output moving on from beyond April, there's no certainty yet, and it's a bit volatile. Would you then, because his question is, or his horizon is for the short term, would you advise him to exit Indigo and maybe invest somewhere else, or does he hold put?
I think he can hold on to the stock. Somehow I feel that this is the market leader in the segment, and since the crude oil prices have actually crashed and maybe, you know, they may not bounce back also to the older levels. So I think now it is the time for them to make some money, and then the debacle, the Jet Airways debacle will certainly, you know, add to its market share, and it will help them in turn. So I think, you know, Indigo is a good bet, and SpiceJet can also be considered, but then Indigo is certainly a good and a safer bet from the longer perspective.
Okay. Well, we have a derivatives query, and we have Gaurav Soni, who's first bought the Maruti 8000 call. He's paid a premium of 63 there, and it's currently trading at around 45. And he's also bought the Hero Motor call at around 3350, for which he's paid a premium of around 29. He is certainly looking at a little bit of a loss when it comes to the Maruti call. Hero Motor call, well, he's largely, well, quits. Now, in terms of levels too, if you notice, Hero Motor is exactly where it is right now. Maruti Suzuki is a little bit further away from it going into the money at around 8,000. So, Amar, actually, if you can come in on this, and if we can take this one by one, let's address Maruti first. Is it possible for Maruti to go into the money? And I'm assuming these are December calls before expiry. And second, what is your view on Hero MotoCorp in general, considering this option has been bought at cost at this point in time?
See, looking at Maruti, I would say that Maruti has approached its key resistance area. And however, the trend definitely remains positive for Maruti. So there is a possibility that we could see some upside in Maruti, but for that, Maruti needs to trade above 79.20 levels or 79.20 levels, because then only the stock would rally. And also we have less of time for the expiry, so that's one of the factors that could play against. But still, I would say that Maruti, he can definitely hold on to his position in Maruti, because the trend remaining positive. It was more on the US Fed decision which led to this sell-off in the markets. Now, looking at Hero MotoCorp, what we are seeing here is that this also is now very close to its key resistance zone. If you look for the last 5 trading sessions, including today, it's unable to breach the 3350 mark, and it's been trading for the last 3-4 days. But the momentum for this stock continues to remain positive from a short-term and intermediate-term trend. So there is a possibility that this stock could fetch him some profit, provided it trades above 33.30 in the immediate short term. That is either today or maximum latest by tomorrow.
Okay, let's quickly slip into the rapid fire segment. Remember, this is where we try and take as many questions as possible. A quick shout out to our experts. Keep your answers as short as possible, but keep it to one sentence if you can. Sandeep, for you, Max Financial Services bought at 400 rupees. Would you advise him to hold on?
He can hold on to this stock, but then somehow I'm not very bullish on the stock. I would recommend some other names like, LIC, Housing Finance and HDFC in the same segment.
Okay, the next one is for you. Amar, Parag, Milk Foods. Abhishek wants a short-term view here.
Yeah, looking at Parag Milk Foods, what we see is that the stock is positive from a short-term perspective, and the stock could rally towards 270, 275 levels.
Okay, Sandeep, for you, Navkar Corp bought at 192 by Shankar. He's asking if he can add more or hold for the long term.
Somehow I feel that he can hold on to the stock. The business is promising. I think warehousing is a promising, logistics sector really looks good to me. So he can hold on to the stock.
Okay, Amar, NBCC is for you. Saroj R wants a target for NBCC, keeping in mind the January expiry.
Okay. Now see, NBCC overall, I would say from a short-term perspective, medium-term perspective, it's positive. So the stock has a potential to rally towards, I would say, 65 to 68 levels on the upside, which was in November, 12th November, the high that was made. So there is a possibility.
Okay, Sun Pharma at 482, Grasim at an average price of 1008. Sandeep, should you hold on to these two for the next year or 18 months?
See, Grasim can be held. In fact, Grasim, he can hold on to the stock. And Sun Pharma, I feel that, he should exit on some bounce because it has already corrected. So there might be some bounce back being witnessed. So somehow I'm not very comfortable with, holding this particular stock. I would be more comfortable holding, Cadila Healthcare or Aurobindo Pharma from the larger names.
All right, guys, we're out of time. We keep queries coming in, but I'm going to have to thank our experts on this note, Sandeep as well as Amar, for joining us and taking us through their queries, as well as taking us through your views on the markets.
Well, some of you are pointing out that you were early viewers, and unfortunately we haven't taken your question. I do understand. We've got several questions coming. Do keep them coming in, and we promise to take as many as Agam pointed out. Do stay tuned. This is Bloomberg Quint. Up next is Power Lunch.